Hello friends, now let us discuss one of the most important factors when I came across, when I was studying with RSI and when I was studying with Andrew Cartwell and I studied from many people, I have learned RSI from many people. One problem I always, stumbled on, whether the reversals that they were talking, right, about whether it will be a failure or not. That means if the price target of the reversal is not acquired, it will be a failure, of course. So whether it will be a failure or not, so was there any way in which we could determine beforehand, will the reversal be a proper reversal or a failure? Well, after researching many years, right, around 2 to 3 years, I stumbled upon the fact, yes, there may be a style or there may be a way in which we can predetermine whether the reversal will be a failure or a success. Now, what is positive reversals? As we have discussed in the last session, when the prices are making higher highs like this and the RSI makes a lower low. So this is the positive reversal. And what are the chances that the trend will continue from here? Now this is the thing that we have to determine. Is there any way to find out that the trend will be continuing from here? So we have to look. Similarly, when we are talking about negative reversals, now this is a negative reversal when the price is making a higher low and RSI makes an higher high. So this is a negative reversal and this comes in a downtrend and this comes in a uptrend. Now, is there any chances or is there any way to determine whether the trend should continue downwards after this reversal is formed, or the trend may go into sideways or even reverse? Is there any way to find out beforehand? Now let us look at one way. Now here Fibonacci comes into play. Now Fibonacci, how Fibonacci came into play? Let us see. If the retracement, that means, as I told you, that the price will come down to form a reversal. This is the price and I am drawing this RSI here, and this is the RSI. This is the RSI and this is the price. Now if the price, come down in a modest way, means if the retracement from this level to this level is between 38.2 and 61.8%, there is a high chance that the target could be attained. That means there is a high chance that the trend will resume on the upside. Okay, but if the retracement is deep enough, that is, it is more than or around 78.6, that means it is more than 61.8, there are 80% chance that the price target won't be exceeded. That means there are high chances that the trend will not be a successful trend. So let's look at one chart. Now you see, we have a reversal here. At this point, the prices are making, and how the prices halted at a 61.8%. This was a reversal. So there was a high chance of the trend to resume upwards, and that happened. So this reversal was a successful reversal. Similarly, at this chart, on this chart you see that the retracement was more than 78.6%. So there were 80% chance, and this was a positive reversal, right? So there was 80% chance that the trend won't resume, and that happened. Very simple concept, and if you just apply little bit bind on it, you can really find it very effective. Right, now let us look at some examples in the real and current market scenario. So guys, this is the daily chart of HCL Tech, and let us see what we find here. Now see, you can see and you can make out that there is a reversal here. This is the positive reversal. RSI making a lower low while price is making a high low. So there is a positive reversal, right? We have seen a positive reversal here. Now let us see what are the chances whether this positive reversal will be a successful reversal, and what are the chances of the trend to be resumed. So this was the point where we have selected our first reversal point. So just we'll draw a few, I'll just Yeah, now we'll just draw a Fibonacci from here, because this is the reversal point that we have selected. You can draw it from here also, it won't matter, but I'll draw it from here. And we see that it has crossed, it has just landed and crossed 61.8%, and it has touched 78.6%. Right now, if I draw a Fibonacci from this level, let us try this also. See, so in the both the cases, it has been able to keep itself above the 61.8%. It has able to close itself above 61.8%. So there are high chances that this reversal may be a true reversal and the trend may resume upwards again. Right? So using Fibonacci, we can just see whether the trend can resume upside or not. But one more thing you should notice here is this thing. Okay, the RSI took a resistance at the 60 levels, and next it was also unable to cross the 80 levels. So these two things are telling us that there is some weakness in the trend, and the this positive reversal may may take some time to reverse the trend, or it may also happen that the trend may not reverse at all. So basically what we have to look at, we have to draw a case using everything and anything that we see, right? So whether let us discuss our main motive first. So this reversal is a true reversal, and there are high chances that the trend will resume on the upside, right? Because 61.8% is stopped at 61.8%. Now let's look at another example. Now this is the daily chart of Wipro, and we notice a positive reversal here also. Have a look. We have a positive reversal here also. Now let us see, use the Fibonacci and see. So you can see here that the close was almost near the 61.8%. Okay, so it also gives you a high chance of the trend to resume on the upside. It tells you that it may happen that the trend may resume on the upside from here, because the reversal wasn't deep enough, right? The reversal wasn't deep enough to breach the 61.8% level, right? I'm just zooming in to show you again. Have a look. So it gives you, now it hasn't closed above the 61.8%, or neither it has closed below the 78.6%, right? So but again the bias is on the upside. But again, if you look on the chart, you will find something very strange. That is, this time it hasn't been able to move above 80 levels. So these 80-20 levels are very important. We will be using this 80-20 levels on the RSI MA3 in our analysis time and again. Let's look at some more examples. So this is the daily chart of Power Grid, and as you can see, there is a negative reversal. Alright, there is a negative reversal. Now let us draw the Fibonacci on it and see what are the chances of this reversal. So see, if it has taken resistance on the 61.8% levels and it has turned down, right? And so there are high chances that this reversal is a true reversal, and it may work and it may push prices down. Now again, when it comes to take a trade, when it comes to when you will ask me, sir, when to trade this. So I trade basically when there is a crossover of the MA, right? When the 5 EMA and 10 EMA gives a negative cross, that is 5 EMA closes below the 10 EMA, gives a negative cross on the closing basis, not on the real time basis, on the closing basis. So this is the best way to trade, what I find. Alright, so there are high chances of this Power Grid Corporation to reverse from here. Now let us look at one more example. So this is the daily chart of Bosch, and you can see we have a negative reversal when RSI makes a higher high and when prices are not able to make a higher high. This is a negative reversal. Now let us draw our Fibonacci on it. We are using the leg, these two legs only, right? We will use this leg to draw our Fibonacci, and when we draw our Fibonacci, we find out that the prices have already breached 71.8% levels. So we will consider that there are high chances that this reversal will get negated and the price may go upwards instead of going down, or the price may go sideways, right? This is just an add-on to your analysis. This is not a high probability setup, but it's a very good add-on. Now we have to use our other analysis with it also. So only using this analysis and trading won't help you. It is a very good add-on, as I tell you, and it will help you to measure, it will help you to set out, high probability when you have too many reversals with you, right? When you're looking at chart 50 chart and 60 chart, and when you have, like 20-25 reversals, positive reversals, now this will help you to filter out the effective reversals and not effective reversals. So this is a tool that it's a very good, when I have tried, and when I mix it with the RSI 3 and when I mix it with the RSI moving averages, we will be covering everything, don't worry. So it possesses a very good type of type of tool that tells me that whether the reversal will be a good reversal or not, right? But again, this is not an 100% thing, right? We have to look at other things in the sense that if you look at the MA3 here, right, it is taking resistance at the 80 levels. Again, this is taking resistance at the 60 levels. So there are many things, other things that you have to consider while taking. But if you are looking at the reversal probabilities to be successful or not, this is a very good thing you can keep in mind, right? So this was this guide for today's. Go and practice this. Try to practice this as much as you can on your charts, and see how this concept that I have just explained, the Fibonacci concept of reversal, works for you, how you are successful in using it very nicely. And we'll come up again with the next video in this week. So we are watching these things in our analysis. Now let us look at one more thing. We were tracking Larsen and Turbo, right? So let us look at the Larsen and Turbo chart before leaving. So guys, this is the Larsen and Turbo chart that we were looking at, and what has happened here, if you can see that this was the reversal that we were looking at, and when we were talking about this reversal was taking resistance at the 61.8 level, right? So this was giving an ample of indication that this reversal may fail, and this reversal may be a successful reversal and prices may go up. Now what has happened here, the prices instead of going down has turned up and moved above 78.6%, right? So at that time when I was discussing with you, right, we missed out two things. First thing that we missed out was this crossover. There was a positive crossover between the MA and the both the 9 exponential moving average and the 45 moving average, simple moving average. So this shouldn't be missed out, right? Whenever we get this kind of condition, and whenever there is a reversal, there are high chances that this reversal may not be a successful reversal. But again, we are as I told you, that we are approaching a good moving average resistance. So we will be keeping this thing in the watch. Right now we cannot abandon it, because if we look at the resistance level, the resistance level is still active here, right? So this is a good resistance level. However, the trade did not trigger also, because I told you that we have to wait for this moving average crossovers, the short term, 5 and 10 EMA crossover, that did not happen, so the trade did not trigger. But again, we are still watching this trade. This may be a good trade, and I'll again show you what will happen when a reversal fails, how we can trade when a reversal fails. This is also a very good concept. So I'm keeping this on track, and we'll discuss this stock again. What will happen when reversal fails? It's a very good concept again, and it tells you that the market may be very strong and it may go up and rush up very quickly. So this was it, guys, for today. I will be releasing another video maybe this week, later this week, and hope you have enjoyed it. And just try these things. Whatever I explain in Traders Classroom, go and try on your charts and try it to use them practically. Then only you will be able to be very successful, trade very successfully, because this concept of Traders Classroom is an a new concept, and what I am teaching you are getting an opportunity to look at it practically. And then again I am coming back to the charts and explaining. So it will be great if you can go and practice this setup. So this is Bharat Junjunwala signing off. Keep earning, keep learning, and happy trading.